This is Module 8B of Accounting 3110, and it's the second of 3 modules that we're going to be doing related to process costing. In the last module, we introduced you to the subject of process costing, and one of the things we talked about was the sequence or the 5 steps that are necessary in order to do process costing. I'd like to review those with you, and I think it would be very helpful to your understanding of this chapter if you can particularly focus on what happens in each of the 5 steps. And recognizing, too, that step 5, where we assign the cost, is really the whole purpose of process costing. We are trying to take cost and assign them either to the units that were transferred out or the units left in ending inventory. So let's quickly go through these 5 steps. Step 1, we look at the physical flow of the units. The second step, we calculate the equivalent units of production. And remember, equivalent units of production will tell us how much work was done this period. We don't want to look at physical units because they are going to be only partially, some of the units will only be partially complete. So to try to determine how much work we did for the period, we have to convert those partially complete physical units into what we call equivalent units. In the third step, we summarize our cost, and then in step 4, we take these costs, we divide by the equivalent units that were calculated in step 2, and what we end up with would be a cost per equivalent unit. Finally, in this last step, we mentioned this earlier, we're going to be assigning cost, and this is why we go through the 5 steps. So the ultimate thing we want from the 5 steps would be the assignment of the cost. These costs, think about them. They may be related to beginning inventory. They can also, of course, relate to current period cost. But these costs, which would appear on the left side of a work in process account, will have to be either sent to the goods transferred out or to the goods that are left. And these, of course, would be called our ending inventory. Now, at the end of Module 8A, I gave you 4 questions in the 4 practice section that we typically do at the end of the module. It is very important in process costing to be able to do step 1 and step 2 correctly. So we will go through the solutions to those 4 questions and make sure that those 2 steps are going well for you. Let's begin with the first question that you were asked, and it relates to step 1. What we're doing here is we are determining how many units we need to account for, and then in turn we're saying this is what happened to those units. We are going to look at where they went, in other words. We are given a beginning inventory of 3,000 units. We're told that 10,000 units were started this period. So this makes a total of 13,000 physical units to be accounted for. Let's look at what they tell us about where those units went. And I want to start here by putting the total in because this is critical to understand that these 2 numbers, these 2 totals have to always equal. And if we're told, as we are in this problem, that ending inventory is 4,000, and we know 13,000 must equal to 13,000, then we know that transferred out had to be 9,000 units. So the critical thing here is for you to always make sure that the units you have to account for equal those units that you have accounted for. If you would pull up the second question, and it relates to step 1 as well. Let's look at the units to account for here. In number 2, we are told that we started 10,000 units. We are also told that we transferred out 12. We had, 2,000 in ending inventory. So we're certain that there were 14,000 units. And because the units we have to account for must always equal the units accounted for, then it's very easy to back into this number for beginning inventory. Let's move along now, and we will take a look at the next problem, which was number 3. And when we do number 3, we are looking at equivalent units of production. What we're doing here is we're going to start with the units, the physical units that were transferred out, and we're going to also look at the physical units in ending inventory. And what we're going to have to determine are these percentage of completion that we'll put in these blanks. Now, it's very important that you recognize that if we're saying we transferred units out, they're always going to be 100% complete, or they wouldn't be transferred out. So the transferred out calculation for equivalent units is always very, very easy. All right, let's look at the ending inventory. Now, the people in the production area will have to tell us how far along these units in ending inventory really are. And in this particular problem, they say they're 40% complete as to materials and 60% complete as to conversion. So we simply multiply. We do the multiplication for each of these, and then we total to get our total equivalent units for materials and for conversion cost. So keep in mind, you can see it right here why we have to keep these separate, because they may be at different degrees of completion. That is, materials and conversion may be at different stages. So let's go to the next one, which is number 4. It's the same idea. When we look at this one, we have 15,000 physical units being transferred out. We know that's 100%. And for ending inventory, note that in this particular question, it said to you, materials are added at the beginning of the process. So the materials are dumped in just as soon as they hit this particular department. So when it says that, you will know that materials are at 100% because they all were dumped in at the beginning. So by the time we're looking at ending inventory, we're confident that the materials are already in there. And we'll do 70%. Again, the production people would give us that information. So we have 19,000 EQUs for materials, and we have 17,800 for conversion cost. I hope those 4 problems went well for you and that you got the correct answers. And if you did not, I hope that you do understand those issues now with physical units versus equivalent units. We're going to move on to examples 3, 4, and 5, and you should refer back to the hierarchy of examples that I presented for you in Module 8A. In this hierarchy, you can see that every example gets a little more complex. So we are now at example 3. And as we begin to look at these last 3 examples, I want to again say that when we do process costing, we have the choice, and either method is fine with GAAP as long as we use the chosen method consistently, but we have the choice of using weighted average or FIFO. In these 5 examples, we are just working with the weighted average method. When we go to Module 8C, then we will look exclusively at the FIFO method and how it's different. But for now, let's just talk a little bit more about what it means to use the weighted average method. What we do in the weighted average method is that we are unable to separate what happened last period from this period in terms of work done and in terms of cost, because what we do, we really merge what we have in beginning inventory with what we have for the current period, and this is why it's called weighted average. The cost and the EQUs are both going to represent work that was done in the prior period and the current period. And you'll see later that FIFO is going to make that distinction and keep those periods very separate. So when we're using weighted average, we are really blending what was done last period with this period. In example 3, if you will look at the hierarchy, you will see that what's new about example 3 is that we are going to have both beginning and ending inventory. So let's work through this. This is only one of the 3 examples that will be in this module today that I'll actually work it all the way through. But I hope you'll follow along, and I will mention that if you look in the content section under these modules, under Module 8, that you will find templates. We'll talk about those in a few minutes, but make sure that you get those printed and take a look at them. There'll be several templates that will apply to this Module B. As we look at example 3, this is going to be an example where we have both beginning and ending inventory. So in step 1, let's begin to keep track of what units we have to account for and where did they go. We started 12,000, so we have 14,000 units to account for. And because we know that this equality must exist between the totals, we can easily find that we transferred out 10,000 units. Now, always keep in mind, when you're transferring out, the reason you're transferring out is because the units are complete in terms of this particular process. All right, let's look at this now and continue on. We did step 1, and let's continue on with step 2. When we do step 2, we're going to move from these physical units to the equivalent units of production. And we know this now, that the transferred out is always 100%. So we will have 10,000, excuse me, I'm going to correct that error. 10,000 in materials, equivalent units, and also 10,000 for conversion cost. Again, just because transferred out implies 100% completion. The ending was only 25% done, and the conversion was 60%. So we will be taking 25% times 4,000. We will take 60% times 4,000. And we have our equivalent units of production for step 2. Now, it's important to talk about this right now because this is the weighted average approach. And you'll notice that even though the problem talked to us about the percentage of completion for the beginning inventory, we do not use that information when we do step 2. The reason for that is, remember, we are not keeping beginning inventory separate. We are letting the 2 periods converge, and this is the approach taken through the weighted average method. So when we later learn to do FIFO, we'll have to pick up on that information about beginning inventory, but it is not applicable when we're using the weighted average method. So we have our EQUs now for both materials and conversion cost. Let's go ahead now. Let's take a look at step 3. In step 3, we're just trying to figure out how many costs that we're going to need to be assigning. So we have costs that are in the beginning work in process. These were costs that were incurred last period, but because ending became beginning inventory, we see these costs present again, and we will be using those in our assignments. 20,000 for materials for the current period, totaling 27,000 or 30,000 for all of our costs in summary. All right, I want to say this again about these costs. These costs in the first line relate to the units that are in ending inventory, And these are actually the second line would be the current period's cost. How much did we, how many materials did we use this period, and how many conversion costs were used this period? All right, the next step is very simple. We're going to take the costs that we found, and remember to keep straight your dollars and your units. We're going to go back to step 2 and look at the equivalent units that we computed, and we're going to divide the cost by those EQUs. And we will get what's called the cost per equivalent unit. And let me give you totals here. $22,000 for materials and $8,000 for conversion cost. So we have $22,000 divided by 11,000 EQUs, $2 a unit. And we will carry these to 4 decimal places in this step. So that can kind of be the way we do this on throughout the problems we work. We're going to get 0.6452 when we do the conversion cost, and then the total cost per equivalent unit for this department is found in the total. So again, backing up just briefly, when we look at step 2 and find equivalent units, then in step 3 we find our cost and we bring in those equivalent units to compute what is called our cost per equivalent unit. What that really means is it cost, the department cost here per equivalent unit means the department cost for one whole unit. So we are talking about this in terms of materials and conversion and in total product cost. All right, the last step of this is to use all the information that we've been using, and we will go through the process of assigning cost. And keep in mind, our purpose is to take the cost and assign them to either ending inventory or transferred out. In other words, what we're going to do is perform the calculations that will allow us to enter this number and this number. This ending inventory will become part of our inventory value on the balance sheet when we do our balance sheet and our other statements at the end of the period. The transferred out, this will transfer either to the next department, or if this is the final department, it will be transferred, the dollars will be transferred to finished goods. All right, let's do our last calculation. Transferred out, 10,000 units, they're always 100%. They have all the cost in them, so we'll use our total cost. And the amount we're going to send to transferred out is $26,452. 100% full cost, $26,452. All right, so we have found one of the two numbers we're after. We have found transferred out, and now we will look at ending inventory. Ending inventory, you have to refer to step 2 and look at your EQUs. You need to look at the ending inventory line and look at how many EQUs were calculated. For materials, there were 1,000 in ending inventory. For conversion, there was 2,400. And now we simply bring down the costs that we calculated earlier for materials. For conversion, we do the calculation. We get 2,000. We get 1,548 for a total of $3,548. So when we set out to do this problem, our task was to find the dollars that should be assigned to transferred out and the dollars that should be assigned to ending inventory. So let's complete our process here of calculating, and we will be adding 3,548 here. Now, when you work a problem like this, you can always go back and check, because we have assigned 26,452. We've assigned 35,48. This adds back to $30,000. We should look at the prior step, particularly step 3, and we had $30,000 there to be assigned, and $30,000 was assigned. Make sure everyone can see this, and we will let you complete that in the next couple minutes, and then we will show you another way to work one of these problems using the templates, again, that have been loaded to the module 8B, and you should print and take a look at. Let me show you the template, and I hope you have it right there in front of you, a blank template. This is the template that relates to the problem. Well, it could relate to any problem, because this is the blank template that I just wanted to show you so you could see the steps. But look with me. The physical unit calculation is in this part of the template. Then we do our equivalent units in this part. We accumulate our cost here in number 3. Right below it, you will find the calculation for cost per equivalent unit. And finally, this is our step 5, where we send the dollars either to transferred out or to ending work in process. And finally, on the right side here, you will see the arrow. And this reminds us that when we complete the work, complete the problem, we should make sure that the costs that we were to assign have been assigned. In an example 3, I believe that was $30,000, and it needs to tie back to that summarized amount for cost. And I'm going to put this in front of you. I know that it may be too small for you to read the details, but I did want to show you that this is using a template to do example 3. So I hope this will be helpful to you to see it worked with a template and without a template. And I can show you again that we ended up with the assignment of cost, as you saw earlier, as we worked through the 5 steps. But we have our equivalent units here, 11,000, 12,4. We have our costs per equivalent unit in this section. And down here we have transferred out and ending inventory assignments. So again, I encourage you, as always, to print everything that we put out there for you, because these are intended to enhance your learning and also to enhance your watching of the video so you can follow as we go. We will be taking a look at 2 more examples, but before we move to example 4, I just wanted to remind you that when we did job order costing, we used what was called the job cost card to keep track of all the cost. Well, the template that I just showed you is referred to as the production cost report. And so this is really the typical kind of document you would see for process costing. Example 4, the new dimension here is that we are going to be looking at situations where we have multiple work in process accounts. The reason we have multiple work in process accounts is because to make whatever product we're talking about, and in my example will be making some kind of bottled drink, you have to move through multiple departments. So for an example, let me just choose 3 departments that might apply to a soft drink bottler. You would have the mixing in one department, the bottling in the second department, and the labeling on the bottle in the third department. So I want you to imagine that units are passing out of the bottling department and they're moving in to what we call the labeling department. Well, what is transferred out of bottling becomes transferred in for labeling. So we're there in the labeling department and they bring in all these bottles and they don't have labels. And when those bottles come in from the prior department, they also bring their cost with them. And this is what we call prior department cost. It's very important that you don't confuse prior department cost with beginning work in process, which is related to the labeling department. Let me explain. If you're in the labeling department and you have beginning work in process, these are units that we had started doing the labeling last period, but we didn't finish labeling. Prior department means they come to us, they've been bottled, they have no label at all, and we need to do the labeling in this department. So when we have prior department cost, it's very easy to add this dimension to the problem. We treat it as a third cost component. Instead of just having materials and conversion cost, now we're going to have three dimensions: prior department cost, material cost, and conversion cost. And the way we treat these prior department costs is we treat them as and these units coming in as 100% complete as to prior department cost. So we will be computing equivalent units for these units. We will also be looking at the cost, and what you've got to keep in mind is it's treated just like materials that are added at the beginning of a process. Remember, we talked about that earlier. That means they would be 100% complete as to materials because you dump the materials in at the beginning. Well, when we bring in units from another department, these are also considered 100% complete as to prior department cost. So it really doesn't complicate things. Especially, it just looks a little bit different when we set it up. So let me explain again. You're going to have three cost components: prior department cost, material cost, and conversion cost. You have the information in front of you for example 4, but I would just show you that here's what's so new, is that we have prior department cost, we have material cost, and we have conversion cost. And so this is what's new. And when we have these units that are transferred out, physical units, and we have ending inventory units, they're going to always be 100% complete in terms of prior department cost. So, for example, in our fourth example, and again, your data is in your lecture notes, you will see that we transferred out 10,000 units, physical units, and we had 4,000 in ending inventory. But when we're computing EQUs, when we are computing those, these will always be 100% for both transferred out and ending inventory, because they are 100% complete in terms of prior department cost. Now, when we get down further and we're accumulating our cost, we will have, again, these same three dimensions: prior department cost, material cost, and conversion cost. Of course, this is our EQUs was our step 2, and the cost would be step 3. And of course, once we compute our equivalent units and we have our cost, then step 4 becomes pretty automatic. We get cost per EQU. So we're simply adding a new column to the template, and we are recognizing that this particular process, there is a process before it. And in our case, it was bottling moving to labeling. And when those bottles move out of bottling to labeling, the cost move with them. And this is what we mean by prior department cost. I also want to back up just for a second and explain something about step 1 that may make this a little bit easier to understand. You're going to have beginning work in process units. In this case, it was 2,000 units. And what we've been putting would be the word started. But think about it. We're in the labeling department. We don't start units in the labeling department. We only have units being transferred in from the bottling department. In this case, I believe there were 12,000 transferred in. So when we're looking at units to account for, we need to be using the term transferred in instead of the term started. Now, what I want to show you again, you should have this printed in front of you, but this is example 4. It is completed. It's been done on the template, which we call the production cost report. And I will point out to you here, this is what is new. Now, when we go to assign the cost, and this is in step 5, if you'll look down in the assignment section, we assign material cost, we assign conversion cost, and we now have a third cost component. We're going to assign prior department cost. So you will handle this new dimension very much like we handle materials. Reviewing it quickly, in step 1, we're going to use the terms transferred in. In step 2, we're going to have a column called prior department cost, and all prior department, whether it's in transferred out or ending inventory, is always 100% complete as to prior department cost. And finally, in step 3, you'll be accumulating cost using prior department cost. You will calculate a cost per equivalent unit in step 4 for prior department cost. And finally, as I showed you, when we assign the goods, and this is in the reconciliation part of the template, you will assign cost based on materials, conversion cost, and prior department cost. Again, looking at the hierarchy that we put for you in Module 8A, you see the 5th example and the final example for our study of the weighted average method of process costing. This last dimension has to do with spoilage. When we manufacture, we always have waste. People in the production area need to determine what is normal spoilage, expected amount of spoilage, and then what is abnormal, or kind of over-the-top spoilage, too much. And that is a management decision, but our role in a management accounting is to help them to control waste by tracking it for them. So what will happen in this last dimension is we will be told that a X number of units were spoiled. And what we will do is we will have to know how many of those units are, and they will affect our computation in step 1. We also will need to assign cost when we get to step 5, not only to ending inventory transferred out, but we will assign cost to the spoilage. Now, with the way that works is when we assign the cost in step 5 to the spoiled units, this becomes an immediate expense to the company. If it is normal spoilage, if it is deemed to be a normal amount of spoilage, it will simply get added to the cost of goods sold for the period. And you know what that will do. It'll increase your expense, it'll drop your profit. as it should, because spoilage is an expense to the business. The other way to handle this, though, if we have unusually high spoilage or spoilage that should not have occurred, we're going to isolate the cost related to that abnormal spoilage by creating a special account called abnormal spoilage expense. And by putting the cost of that spoilage in a very specific account, this allows management to see how that spoilage impacted their profit for this period. And by doing that kind of tracking, they can better control the effects of spoilage in their manufacturing department. Let's look now at how spoilage is going to affect. I talked about it affecting step 1 and how it will affect step 5. If you would please refer to the information in your lecture notes about example 5 with spoilage. When we did our units, this problem, we have 2,000, we started 12, and we had 14,000 units to account for. This is, of course, the first step, the physical units step. But let's look at how we account for units when we have spoilage. We are going to have units transferred out. We're going to have spoiled units, and we're going to have ending inventory units to equal total units. Now we know our total is 14,000. Perhaps we're being told that we have 500 spoiled units. If we know that we have 3,500 in ending inventory, then we can always back into the number we don't know. We transferred out 10,000. So again, the same trick. If you know that the total must equal the total, you can always back into any number that you're not given. And that number, that variable, will change from problem to problem. This is going to be given to us how many units were spoiled. So when we go to the final step and we assign cost, and I'm going to jump to step 5 with you and show you that. Again, there's a template for this, and it has the solution in its entirety on that template. But when we get to step 5, we're going to do assignment to transferred out. We're going to do assignment to spoiled goods. And we're going to do assignment to ending work in process, or ending inventory in this particular department. Now, in order to assign cost to the spoiled goods, it will be necessary for us to use the spoiled units information as we compute the equivalent units of production. So if you have your template in front of you, in the step 2, you will see spoiled units, and you will see that we have to be told that they were 20% complete as to materials and 50% complete as to conversion. So not only will management tell us how many units were spoiled, but they will also tell us at what degree or at what stage of completion did the units become spoiled. So this is very similar to things we've done before, but it does affect, again, when you assign the cost to the transferred out units and ending inventory, you're also going to be assigning a certain amount of dollars to those spoiled units. So let me draw for you the T account that would represent the example we use for spoiled units. We had beginning cost, we had cost for the period, current cost, for the period, which added up to $30,000. But this time, the way we worked it, we are sending out 26,524 to transfer it out. We're sending 31,14 to the ending. And when you add those two back, you will see that you are short $362. That's because $362 is going to be sent to expense. And once again, if it's normal, normal amount of spoilage, it will be sent to cost of goods sold. If it's abnormal, we will put the $362, isolate it in an account called abnormal spoilage expense. So the key characteristic of spoilage is you have to assign cost to the spoiled units, just like you do to the units transferred out or those left in ending inventory. This concludes our coverage of Module 8B, where we looked at examples 3, 4, and 5. We looked at having both ending and beginning inventories. We looked at prior department cost, and finally we've just looked at how we handle situations where we have spoilage. Next time, as you prepare for Module 8C, we will be looking exclusively at the FIFO method. So as you read about it and prior to the lecture, it would be very helpful if you would look at try to determine how it's different than using weighted average, and also try to think about what the cost and benefits are of using FIFO instead of using what we've been using, weighted average method.